Time for the Google earnings. Remember, Google have a big stake in SpaceX. SpaceX is crashing the day before the next launch, and I have gone 100% all in. All cash, all margin, all external borrowing, and sold everything to buy every single share of SpaceX. I am down big today, and I'm ready for a major payout. I'm either going to lose it all, or I'm going to go to $1.5 million to $2 million. I've got just about $1 million all invested, all in SpaceX. Tonight, we're going to hear about it on the Google earnings. Get ready for the Google earnings. I'm going to break down the business, the intrinsic valuation, the margins, the profit, and then we're going to hear from the CEO, Sundar, and the team at Google. Remember, Google own YouTube, so this is one for me. I've got a good idea how this business is going because I see the revenue, the earnings revenue on my channel, and I can see what people are spending, the CPM. It's the advertiser's rate, how much they pay to advertise. Let's get ready for a massive night. And then tomorrow night, live on this channel with $1 million on the line, we are going to see if the rocket takes off. Will it take off? There's an issue now with the weather. Will it be postponed? Will we have a successful launch? All those answers will come tomorrow. But one hell of a couple of days on the channel. It's stressful, no doubt about it, going all in with conviction. On the day the earnings call starts, this is a big, big day. We're going to lose it all, or we're going to go to $1.5, $2 million. $2 million is definitely on the cards with this. Okay, and so is losing it all. We're all in. But right now, we are talking Google. Let's get straight to it. The Google earnings starts, we'll have the numbers, in fact, in half an hour, and then the earnings call itself starts in just under an hour. Get ready for it. Google is dropping at the moment. SpaceX is showing some support now. Where are we going? Short interest is absolutely huge on SpaceX. Everyone and his dog is shorting the market tonight. Anyway, often is a big mistake. But anyway, there you go. Tap the like button. Consider subscribing. Let's talk Google. I'm going to give you all the numbers starting off right now. Here we go. The intrinsic valuation of Google is 28% overvalued. We're valuing this at 248. It's expensive. The whole market is expensive. Talk about expensive. Let's scroll down and take a look at the business of Google. 75% solvency. It's not going anywhere. It's not going bust anytime at all. Profitability, 74%. It's looking good. But let me bring you all the numbers tonight as we watch the market fall, as we watch SpaceX fall off a cliff. You don't even want to ask how much I'm down today. Well, when you put $1 million in a stock and it drops 60% from when it IPOs, just about, you can imagine how much I'm down. So, Google, tonight, one company is about to answer a question that could decide the direction of the entire stock market. Not just its own stock, but the entire market. Everything is on a knife edge. We spoke to you this morning all about the carry trade unwind. This is a pivotal moment in history. Whoops, that wasn't supposed to do that, was it? Disconnect that. That's my phone with its I knew I should have turned this off. This is the trouble when everything takes control of your stuff. It just all gets a bit crazy. Let me turn that off again. What is it called? Airplay and continuity. There we go. Let me turn that off. Right. Shall we carry on? Bit of a drama, wasn't it? Anyway, the whole market is hanging on Google and then SpaceX tomorrow night. Let's break it down. Because in the next hour, Google reports on its earnings. We're going to cover it live. And what happens on that call will not stay contained to Google. It won't. If Google says there's problems, the whole market comes down and SpaceX will go down further. This is why I think SpaceX is already down so much. I think it's massively oversold. The shorters are getting all their own way. No one's buying it at the moment. I think they will tonight on the earnings. And my $1 million I've got invested could go very easily go over $1 million tonight. Anyway, it will ripple through Microsoft. It will ripple through Meta. It will ripple through Amazon. And it will ripple through Ripple, XRP, crypto. And it will most certainly smash through SpaceX. Every single member of the so-called Magnificent Seven, if you own tech stocks, I own $1 million now of SpaceX. If you own an index fund, if you have a fund retirement account sitting on the S&P, you need to understand what is about to happen tonight. Because by the end of this live event, we're going to cover the earnings. You're going to get everything. You are going to know exactly what question Wall Street is really asking from Google. As we see Google falling down now, and so is SpaceX. This is my portfolio, down $30,000 today. That's what happens when you go all in. You have to go down to go up. We warned everybody that Virgin Galactic would be worse. Do not be in Virgin Galactic. That's even worse today. SpaceX is falling down, but I think it's about to bounce big. And when it does, we can turn it into huge, huge profits. But let's keep our eye on Google. So, Google, it is not the question you think. Stay with me right the way to the end, all the way through the earnings, and everything is going to be explained, because I am going to lay out the one number buried deep inside this earnings report that could tell you whether the entire AI trade is about to keep running or whether it's about to hit a wall. So let's get into it. Here's why tonight matters so much more than normal earnings call. We've got everything on a knife edge. This morning we spoke about the carry trade. We spoke about SpaceX launch tomorrow. There's so much going on all at once. The Iran war is worsening. Inflation is worsening. It's a very tough time to decide to buy SpaceX. A lot of people are questioning me. Why have you gone all in on the most riskiest stock there is, SpaceX? Well, because I'm buying with conviction. That's why. It's not easy, but to make life-changing money isn't easy. It's never been easy. So Alphabet is the first of the mega cap technology companies to report tonight. It's the earnings season. We're back every day. 2, 3, 4, 5, 6 earnings a day. Everything is happening now. That means Google is not just reporting its own numbers tonight. Google is setting the tone. And it will set the tone for everything that matters. Everything that matters tonight will be set with this. So get ready for it. It's not going to be pretty at all. For some reason, that needs to change. There you go. That's better. I'm not quite sure. Oh, my cameras seem to be locked. That's better. We fixed it. Did we fix it? Oh my gosh. What is going on here? This is all a bit weird. The cameras are all doing weird things. But there we go. Just have to live with that for a minute. Not to worry about it. Anyway. So whatever happens on the call tonight will affect everything. We're going to look for the lens at Google, but we're going to be able to see through everything else. Microsoft earnings, Meta's earnings, Amazon's earnings, because of all of the enterprise spending. It's all interlinked, and every other name in that group. If Google beats and the market cheers, you can expect a wave of optimism, and that will come into SpaceX because they own SpaceX as well. So it's a big gamble on Google tonight. heading into the rest of the big tech earnings season. We're going to cover it all. But if Google stumbles, or if the market reacts badly, and bearing in mind we're already down, even to a decent quarter, that fear spreads fast. This is the first true test of big tech earnings this season. And SpaceX is leading the trend, as you can see, dramatically going down at the moment. What is going to happen? SpaceX is down big, being shorted like you wouldn't believe tonight. It's a very difficult night for investors. It really, really is. Let me see if I can fix this now. I might be able to fix this. I'm not quite sure why my cameras are all being weird. But anyway, what about if I go to this one? Does it change? Change to that one? Blimey, what a nightmare this is. There we go. I've got control of it again. I went to backup systems. We've got redundancies for everything, just like SpaceX, at least I hope anyway. Anyway, Wall Street is watching every single word. So am I. And as we watch, it's still falling. SpaceX is gaining momentum now. Very painful night for me indeed. So what exactly is Wall Street expecting tonight? The numbers are big. Analysts are forecasting approximately $117 billion in revenue. They are expecting earnings per share of around $2.88. That is a big ask. Now, on the surface, those are enormous numbers. They are. But here is the part most casual investors miss. When expectations are already this high, simply meeting them is not a win. It isn't at all. Wall Street has already priced in a great quarter. So the real question tonight is not whether Google delivers a good quarter. It is whether Google delivers a quarter that is good enough to justify a stock that has already run up in anticipation of this exact moment. Meeting the number will not be enough. Beating it may not be enough. Tonight is about the size of the beat and, more importantly, what comes next, the guidance. So we've got 15 minutes before we get the numbers. Then we've got the live earnings call. And we're watching Google and we're watching how it translates to SpaceX. Today, I decided to sell all of my Coca-Cola. A lot of it in profit. I'd already made 120 grand this year. The top lots for a wash, a very, very small wash. No money made at all, but the amount I could make on SpaceX was far greater than leaving the money in Coca-Cola. So I sold it all and I moved everything 100% into SpaceX. My average now is a 100 and I forget what it is now, 126. The IPO was 135. So we are nicely $9 below the IPO price, which is great, but it's still falling. So let's start with the engine that still drives the entire company. Search advertising. I understand it. I make a living on YouTube and I understand how much money Google are earning because I can see what they're paying me. When they're paying me increased ad revenue spend, I know that Google is making more money. It's just right in front of me in black and white. Everyone wants to talk about artificial intelligence right now. Everyone wants to talk about Gemini. But despite all of that attention, Google search advertising remains Alphabet's single largest source of revenue and, most importantly, profit. This is still the core of the business. It is. And here is what investors are really watching for tonight. Has AI-powered search made this advertising machine stronger, or has it started to weaken it? There has been real concern on Wall Street that AI overviews and AI-generated answers could reduce the number of clicks going to advertisers. In fact, we have seen it. YouTubers have been complaining for months. We've all dropped in numbers. Every YouTuber has dropped in numbers. We've been able to maintain our numbers, but globally, numbers are down. YouTube channels have shut down. People aren't making money. Why? Because ChatGPT came along and people got the answers without having to watch a video. Remember what Google actually is, YouTube is. It's a search engine. People ask it a question, it delivers an answer via a video. But the video is, generic. It's specifically aimed at you. Well, ChatGPT, you can talk to it and you can ask it exactly what you want in relationship to you. I mean, you can ask me questions and I'm live and I'll sit here and answer them. And I think that's why we've survived. But many YouTube creators have collapsed. Numbers are down. All sorts of stuff is going on. We've managed to continue growing, but it's been tough. It has been a tough time, but the tough get going when the tough gets tough. Makes sense? So we're still here and we're still growing and we're still beating our own standards, but it's been very, very difficult going through this period of time. So the question is Google still making money? Well, a lot of people have stopped broadcasting. A lot of numbers are down. However, those that have stayed live have received more money for those advertisement clicks. So are Google still making the money? Well, tonight we get to find out from my boss, Google YouTube. Let's find out what it is. That would affect and hit the exact revenue engine that funds this entire company. And if it does, we're in trouble. If search advertising numbers come in strong tonight, that fear gets pushed aside, at least for now. If they come in weak, that is a 5 alarm. That is a fire alarm for the stock. No question about it. Now let's talk about YouTube. Now I know more about YouTube than Google search. Let's talk about that. Because this platform has already quietly become one of the most important growth stories inside Alphabet YouTube advertising. YouTube Shorts. Now, YouTube Shorts have exploded. You've seen me make a lot more. In fact, I have a YouTube Short come out every 30 minutes, 24 hours a day on several channels. The Clips channel, Extra channel, we've got the Music channel and the main channel. Plus Instagram, Reels, X. I have shorts coming out everywhere, every 30 minutes. Right now, as I'm sitting here across all my platforms, all my networks, every 30 minutes a short comes out. But the trouble is with shorts is it doesn't make you any money. It's a lot lower revenue. So what Google are hoping, what YouTube are hoping is it gets more views because people like short form vertical content, and thereby it can bring up the slack. Even though it earns less, it's less valuable, you get more views. That's why I do so many shorts now. You may have remember a time when it was lives and videos and a short now and again. Now it's more shorts than anything other than live, of course. Anyway, so the YouTube Shorts Premium, it is under question right now. The subscription revenue, all of it. Now, subscription revenue is up. People are supporting YouTube more than ever, at least the creators like us who are growing. As you know, we're gaining members all the time and we're doing well on that, but not everybody is. A lot of channels don't have any members at all. Some have a couple. We are growing all the time. In fact, the majority of our audience are in fact members. So that space continues to grow in importance inside the business. A strong YouTube number tonight would send a clear signal that Google's ecosystem is not just surviving in a competitive streaming and social media landscape. It is in fact thriving. We think it is. It's switched, it's pivoted, and a lot of weak YouTubers have given up and they've gone home and it's all packed up. But we have worked harder, gone live more, done more, and we've kept it going. Anyway, watch this number closely. The YouTube number tonight will tell you everything, because YouTube has become one of the most important, underappreciated parts of the entire Alphabet story. Now, here is the segment that many analysts believe could be the single biggest story of the entire report tonight. What am I talking about? Most of you probably know. It's the cloud. Google Cloud. A growing number of Wall Street analysts believe cloud is the business to watch above everything. I can believe that to a degree. And watch, it could be above everything else. And tonight we'll learn all about it. We're watching Google come down. We're starting to see a little bit of buying on SpaceX. I keep showing you SpaceX because I'm 100% all in one stock. I'm all in with margin, external borrowing, all in with SpaceX, ready for the launch tomorrow. I've got $1 million invested in SpaceX, all in, all margin, all external borrowing, sold all my Coca-Cola, and I'm 100% in with SpaceX at the moment. So, and of course, Google owns SpaceX. So tomorrow night, we're going to cover the earnings call, and you're going to see me go to $1.5–2 million or lose it all. It could happen. I mean, I might have to sell for losses. That's never good. Is that likely? Well, it's possible. If the launch gets postponed due to weather, that's likely at the moment. What about if the rocket blows up? That's very unlikely, but it's a rocket. I mean, let's not kid ourselves. It's not a can of Coke sat on a shelf, is it? Like I used to invest in. It's a very high risk asset, hence the high risk, high reward. So why does cloud matter? Why does this matter so much? Because cloud growth has become one of the clearest real world signals of enterprise AI adoption. This is not consumers experimenting with a chatbot. This is businesses paying real money to run AI workloads at scale. If Google Cloud posts strong growth tonight, that is not just good news for Alphabet. That is good news for the entire thesis that companies are actually spending real budget on artificial intelligence infrastructure. So tonight, listen out for Google Cloud numbers, and it'll also resonate with Nvidia, Microsoft, Apple, the list goes on. You want to hear a good cloud number tonight. I really, really hope we do, because if Google bounces tonight, so will SpaceX. And then I can sell my top lots, I can clear the margin, and I can buy on the way down again if there's a delay or something goes wrong with the rocket. Anyway, a weak cloud number, on the other hand, tonight would raise uncomfortable questions about the whole sector, across the entire technology sector, not just for Google. And as we go into earnings season, that would tell you where we're going. And it won't take much now because of the carry trade. We spoke about it this morning. Everything is on a knife edge. This could be a very, very, very painful few weeks for everybody. Anyway, that brings us to the heart of tonight's earnings call. The question that every single investor, every analyst, and frankly, every person holding tech stocks in their portfolio wants answered. What is that question? Well, is artificial intelligence actually making money? This is a huge, huge ask. Is it making money? Google has poured billions of dollars into Gemini, into AI overviews, into the data centers and chips required to power all of it. For the last 2 years, the story has been about promise, about potential, about excitement. Tonight is different. Tonight is about proof. No more. We want to hear the numbers. Investors do not want another slide deck about the future of AI. They want to see it show up in the revenue line. And we'll know this in about 5 minutes' time. Now, Google is plummeting and it's going down faster and it's taking SpaceX down with it. My margin call is going to get closer and closer. It's going to go all the way to the wire. I've put all my money on $1 million now. At least it was. It's not worth $1 million now. It's down a big, big, big time. All right. And Google is falling off a cliff. It's starting to go down and it's pulling SpaceX with it. Remember, they own SpaceX. If this goes down, everything goes down. The shorters are having a field day at the moment. But I don't like the shorters. I go deep when in shorters show up because the shorters live for nothing other than selfishness. They want to destroy businesses, destroy ambition, destroy economies for their own selfish greed. I don't like it. I don't believe in it. I think it's wrong. However, I thank them for it because it allows real investors to get what they want cheaper, because we all know Google is expensive. We all know SpaceX is expensive. When the shorters with their negativity, their moaning and their stupidness show up, we get busy and we dig deep. Many of the big banks in America have already bought SpaceX at 150, 140. Cathie Wood, ARK Invest, was buying at 150 and 145. I started buying at 130, 138, 139. My average now is 126. I've got a better average than most of the institutions. We know it's going to go back up and the shorters will lose all their money. Unquestionably. But while that's going on, it's not fun and it's not easy. But remain in the game. Remember right now, it's about remaining in the game. Can you actually stay in the game? That is what it is. This is my live real position. I've got nearly $1 million in SpaceX. All in. This is a live position I'm running right now, and you'll see me literally get margin called live on the screen if it happens. So they want to see it. We want to see it. Everybody wants to see AI show up for the first time in the profit margin. That's a big ask tonight. Are we there yet? If Google cannot show that these AI investments are translating into real financial results, the market is going to start asking a much harder question. And that question is coming up in just a moment. So everyone tap the like button. Have you all done that? Have you all considered subscribing? Let me take a break from this for a moment from Google. We've got 2 minutes before the numbers are out. I'm going to keep my eye on it, and we're going to bring you everything live for you. And we're going to go over to the live earnings call. Everything's going to happen. Let me share with you my actual position. So here we go. Come out of Google just for a moment. Here we are. This was $1 million. It's going down very quickly. 658,000 plus I've got another 70,000 in the Roth IRA, plus I've got another 100,000 in the ISA and the Robinhood UK, all in SpaceX right now. It was $1 million. It's coming down very, very, very quick. It's very, very quick. If I show you my margin position, the margin buffer is now at 34.8%. That is the margin buffer. And it just got worse because a few hours ago, Robinhood re-rated SpaceX from 25% maintenance to 30%. And remember, they can raise it whenever they want. And if they fear that this is in trouble, they raise it to 50%. I will get very, very close to a margin call. No question, this isn't something you should follow me doing. This isn't something anyone should follow. I'm not giving financial advice. I'm buying with conviction. I understand what I'm doing. I know the risks involved. I know the benefits as well. And it's not an easy game. And I hope that no one is following me thinking, well, Martyn has won for 4 years in a row. He's going to win again. The day will come when I don't win. No question about it. 95% of day traders lose. I've not lost once in 4 years. It's inevitable I'm going to make a mistake. I don't think it's going to be a mistake. I'm buying with confidence, but it could be. So if you are buying at SpaceX or whatever you're buying, please be careful. This is going to be a very, very, very bumpy ride. And it is incredibly stressful to be part of it. And at the same time, broadcast to you while I'm showing you my live position. So before we get to that, I'm going to give you the number one point tonight. But before we talk about that, let's talk about capital spending, because this is where things get expensive for Google. 10 seconds to go before we get the numbers. I'm keeping my eye on the numbers. Let me refresh the screen. I'm keeping my eye. It'll pop up in my Bloomberg terminal So I'm going to keep my eye on it. At the moment it comes, I will bring it to you. All right, so let's keep on going. As soon as I get it, I'll bring it to you. So this is where things get expensive and really fast, and things move really quickly. So SpaceX is bouncing. Google is bouncing. Are we going to hit $1 million tonight? Alphabet continues to pour enormous sums of money into AI chips, into data centers, into raw computing infrastructure. Now, tonight, investors are going to be listening closely for two things. First, does management expect to spend even more going forward? And second, are they confident these investments will actually deliver strong returns down the road? This is the tension. I'm starting to see numbers come across the wires. I'll bring it to you when it comes, when I can. Oh, Google's bouncing. You'll see SpaceX bounce off it as well. This is the tension sitting underneath every AI stock right now. Spending huge amounts of money is easy to justify when growth is exploding. It becomes a lot harder to justify if growth starts to slow while the spending keeps climbing. It does. We've got a little bounce now on Google, 0.5%, and so is SpaceX. But SpaceX is up after hours. It's all trying to go together. Tonight, we find out which direction that tension is heading. Here is something a lot of casual investors get wrong, and it completely changed how you interpret tomorrow's headlines. Even if Google beats on both revenue and earnings tonight, that might not make hang on. We're watching. The wires are lighting up. That might not. Oh, there we go. Google is popping. Google is popping. It doesn't. We don't have the numbers yet. We could see a massive pump on SpaceX if it does. Yep, SpaceX is going up in the after hours by 0.1. Could be a massive night if these numbers hold. We don't have the numbers. We're waiting for the numbers to come across the wire, and straight goes down. Look, there you go. Be careful chasing this. This is algorithms now preparing for the news. The news isn't out yet. We're up and down like a blue-ass fly. Look at that. Boom, 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 boom. Remember I always said set limit orders on earnings. Set limit orders on earnings. 10% down, 10% up. I've spoke about this a lot on the show. Very easy to make money, but you can't do it live. You need the limit order locked in. Anyway, so get ready. What really matters now is what management's outlook for the rest of the year often has far bigger impact than the share price, than the quarterly numbers that has already happened. It's about the guidance and the presentation that they're about to give us. 3 minutes past 3. SpaceX is falling again. Down goes Google. A lot of movement here. The market is forward looking. It does not care as much about what already happened 3 months ago. It cares about what is coming next. So if you see headlines tomorrow saying Google beat expectations, do not assume that means the stock goes up. Very often we see it going down. Oh my God, SpaceX is falling. $115 now. Watch the guidance. That is where the real story will be told. And this is exactly why tonight carries weight far beyond just one company. Google Alphabet is one of the largest companies on the planet. Its results have the power. Texas Instruments beats on earnings. That's good. We got a special guest.
At Diesel_Ada tipped $1.99 through Super Chat. Bloody frickin' hell. My blood pressure is up arrow emoji.
Yeah, I know how you feel, mate. My blood pressure is through the roof as well. It's very, very stressful. Texas Instruments has beat by 20 cents. Revenue beat by 5.46. Beat by 220 million. Texas Instruments looking good. That's the first one. We'll get it on the wires in a second. SpaceX is falling. I had $1 million in this and it's falling. People often say don't try and catch a falling knife. That is not what Peter Lynch said. Peter Lynch said, catch a falling knife carefully. That's what I say. Catch a falling knife carefully. Okay, here we go. Its results have the power to move the S&P 500. A strong report tonight could send futures higher and set an optimistic tone for tomorrow's entire trading session. A weak report. RTX revenue, I've got to wait for the clarification of the news. You get news out and then it gets amended. I don't want to report on anything that is wrong. People are saying Google has beaten on earnings, but I got Bloomberg and I check everything first before we start shouting about it. Anyway, this is bigger than Alphabet. This is about what tomorrow looks like for anyone with money in the market. So now let's get to the real question, that question underneath every single number we have talked about tonight. Can Google prove that artificial intelligence is generating more value than it is costing? That is it. That is the entire ball game tonight. If Google can show that its massive AI investments are actually strengthening search strengthening, cloud strengthening, YouTube strengthening, and advertising profits, investors are going to reward this stock and probably reward the broader AI trade right along with it. But if Google cannot show that tonight, the market is not just going to question Google's valuation, it is going to start questioning the entire AI investment story across the whole technology sector. Google is down nearly 2%, and we've got SpaceX now $114. Every dollar spent by Microsoft, by Meta, by Amazon, by every company chasing the AI build-out suddenly gets viewed through the much more skeptical lens. That is why tonight is not just another earnings call. This may be the single most important big tech report of the entire season. The first domino, the one that tells us whether the AI trade keeps its momentum or whether Wall Street starts asking for the receipts. Watch search advertising for stability. Watch cloud for growth. Watch guidance more than the headline beat. And above all, watch whether management can finally connect the dots between AI spending and AI profits. There it is. That is the story tonight. That is a story that will define the earnings season. And that is the story we'll be breaking down tonight. We have got the earnings call just a few minutes away. And we're seeing Google drop off a cliff. It's bouncing. SpaceX is dropping as well. Let me show you SpaceX right now. In fact, let's go to the broader market and show you everything. SEI Investments Gap, a beat, $1.66 by 25 cents. That's a revenue of 641.62, beat by 5.27 million. Banner, non-gap EPS misses by 0.26 revenue, 172 million, misses by 2.54. Google, here we go. Here are the numbers that I can verify now. I need it on the Bloomberg terminal, not just what Robinhood says. Alphabet gap of 9.11, beats by $6.22. Revenue of 119, beats by 2.8 billion. It's a good night. Now remember what I just said a few moments ago. We get a good beat, doesn't mean the stock goes up. It's gone down. It's gone down. And look at SpaceX going down $114 now. What a steal this is. The intrinsic valuation for SpaceX is $67. I told you that the entire time. You can't buy SpaceX for the intrinsic valuation. It's got to be at least double that, which is 120. We are now oversold. Massively oversold. So it's a huge buy. I can't buy any more. I've bought every single thing I can. The shorters are crushing it. There's nothing we can do at the moment. The shorters are trying to destroy the stock. Alphabet gap EPS, let me show on the screen, 9.11, beats by 6, way above expectations. Revenue of 119.8 billion, beats by 2.82 billion. This is great. Gap EPS of 9.11, beats by 6.22. Revenue beat. Google services increased 15% to 94.5. I told you Google's business was good. I see the ad revenue. Even though many other YouTubers have given up, we kept going and we told you things will be okay. Led by 17% growth in Google search and others, 15% in Google subscriptions. I told you that was up. You can see that by the amount of members that we have. As it's off the charts, really. And what else? And devices, and 13% up in YouTube ads. That was what I told you. The CPM rate is up. We know Google is doing well. The tech business, the sector is still in play. Why is it selling off? Well, it's selling off because now we've got the most volatile stock in the history of the stock market, SpaceX, as a publicly traded company. You're allowing shorters to come in and crush the stock. However, there'll be huge volume at any moment. And when there is, they will get wrecked. And my portfolio will go way through $1 million. It's not a matter of fact. It's not a matter of if. It's a matter of when it's going to happen. And I would say on the flight, hopefully by tomorrow. But if we get a delay, that'll be a bit more pain for a bit longer. But you don't make any money without putting yourself out there. Google Cloud, this is the one we spoke about, saw a meaningful acceleration in growth ad revenues, increased 82%. This was the big number I was looking for. This is good for Google. It's good for the tech sector. It's good for SpaceX. Google Cloud saw a meaningful acceleration in growth as revenues increased 82% to $24.8 billion, led by increases in Google Cloud Platform GCP. Across enterprise AI solutions and enterprise AI infrastructure, as well as core GCP services. 15 minutes to go before the call begins. We're going to stream the call for you. It's on YouTube. We're going to bring it all to you. We're going to discuss it, react to it. We're going to see how SpaceX reacts to it. And are we going to go back into the green tonight? It's been a hell of a day today. Hell of a day. My biggest gain was yesterday, $42,000 up. And now today I'm down 35,000. What a flipping swing that was. I think you can agree that was something else. Anyway, Consolidated Alphabet operating income increased 30% and operating margin expanded by 2% points to 34%. Now we're seeing Google, I expect it to turn green. Let me come back to it. And we will see a bounce from SpaceX. It will come after hours. Expect it to come in the early hours of the morning when enterprise money moves into SpaceX. They will. They absolutely will. Let's go through our positions as we wait for the call to begin. Here we go. So I was up 42 grand yesterday, down 38,000 today. Huge. It's not really that bad, actually. It's more like about 19,000. The reason it's 38 is I'm all in with margin. So I'm amplifying the losses. But that's okay, because in a minute, I'll be amplifying the gains. I have not sold for losses. I've not sold when I'm down. So I'm not going to sell when I'm down unless we have a disaster with the rocket. Then I'm in trouble, no question. But there you go. Virgin Galactic, we warned you tonight, do not buy this today. It'll go down. The big money has walked away from Virgin Galactic for now. It's waiting to reposition. It's all going into SpaceX at the moment. Here we go. Google has turned green. Google has turned green. Look at that. Very nice. SpaceX is still falling. Expect a big bounce here. We're massively, massively, massively oversold. I'm all in $1 million. All of my money, all of my margin, all of external borrowing, all in one stock. Sold all my Google, all my S&P, everything to be all in. There's going to be one hell of a short squeeze, and it'll take my portfolio way through $1 million to $1.5 million, maybe even $2 million. Palantir is down. Gold is up today and flat on the after hours. Amazon, it was down, and the moment we got the earnings from Google, we popped up. This is good for the S&P. It's good for the Mag 7. Apple is down. Enphase Energy down. It had a big profit today. People took profits. Coca-Cola, I sold it here for a wash. I got out, sold it for a wash. I decided even if we go up to 85, I can make a lot more money by using that money to buy SpaceX. That's exactly what happens to Coca-Cola. It's why it's staying down. It's used as the piggy bank. J&J, defensive, up. Chevron Oil, up. Tesla going down. You're going to see SpaceX take over Tesla. And with Tesla going down and down and down, that can only be good for SpaceX. Not good for Tesla shareholders, but really great for SpaceX shareholders. McDonald's is down. Google is up, as you can see, 2.45. Looking tremendous now. Microsoft popped on it as well. Meta popped on it. You can see that's what after hours it liked it. It's setting up for their earnings call. We know they'll do well. Nvidia has gone up on it. This is good. This will put money into SpaceX. People will take profit and buy on it on the way down. Walmart is down. I can't buy it now. I've got no money left. Tilray Brands down. It's worth nothing. Robinhood down. Sorry, up after hours. I beg your pardon. Vertical Aerospace. The profit was this morning. It's gone. Joby Aviation down. Arch Aviation down. Taiwan down. Bitcoin down. XRP down. We took profits at $115, $1.15. We told you we would, and we did it. So Ethereum is down. Let's go back to the overall portfolio. We're getting a little bounce now on SpaceX. Very nice. The S&P is going up. SpaceX is going up. Come on. Let's have it. Let's have the top lots. Let's go all the way to 147. Let's go there. Imagine the people that paid 229. Bloody hell. They're down like 55, 60%. There are people who pay 229. People are worried about the unlocking. Doesn't exist anymore. It's overpriced. And why, when you unlock, would you? People have badly reported it. Some really idiots on YouTube are saying things like, it dissolves, it dilutes the stock when it unlocks. No, it doesn't. The shares are already there. They just can't sell them. It doesn't dilute the stock at all. It allows people to sell them. Some really bad reporting for some people that haven't got a clue what they're talking about. It's not actually dilution. It's that they can sell it. Now, why would you sell it? Why would you sell it at 115? That's absolutely mental. There's no one on the planet who's selling at 115. The intrinsic value is $67. You're less than double the intrinsic value. Anyone who sells at 115 needs their bloody head read. But then people will, of course. People do all sorts of silly things. Anyway, let's get ready to rock and roll. We've got 10 minutes to go. Let's go to live Q&A. Live Q&A on the show, and let's bring everybody in to the show. Wow, my God, there's 1,100 people watching. I had no idea we had so many people watching tonight. Could everyone smash the like button? Let's go mental. We've got 10 minutes to go. I've got $1 million on the line with SpaceX. This could be a huge margin call or a huge, massive pump tonight. Google did great. Let's get 500 likes. 500 likes in 1 minute. Let's get ready to go. This is my SpaceX position. We're starting to bounce. I put $1 million today. I'm all in on SpaceX. 100% of my money, all the borrowing, all the margin. Let's go. Everyone tap the like button. We are now 10 minutes to go. Let's get excited in 5, 4, 3, 2, 1. 500 likes. Let's go. Let's do it. Right, we're starting off with 12 likes. Let me refresh the screen. It's out of date. We want 500 likes in 1 minute. 209, bang, straight away. Look at that. No down likes. 210. 210, let's go. 210 likes, let's go. 225, I'm loving it, loving it, loving it. And here comes the bounce on SpaceX. We put $1 million tonight into SpaceX. $1 flipping million tonight in SpaceX on the bounce of Google. There's our song. There's our magic cat. We'll get a song in that. In a minute. Yeah. We'll replay that one in a minute. We need 500 likes. Let's come back to it. We've got 272. Come on. We're over halfway. Over halfway. Google reports in just 10 minutes. We're going to cover it live. Hear from the CEO of Sundar, my boss, Google's boss and YouTube's boss. But for that, we want 500 likes. 284, 289. Yes. SpaceX is starting to bounce. We're up now 0.5% after hours. I've got $1 million on the line, all in with margin. 100% margin use. 295. We're over halfway there now. Let's get 500 likes and then we can go into the call. We've got 9 minutes to go. Welcome if you've just joined us. Do smash the like button and consider subscribing. That would be absolutely great. Now then, tonight you did notice we do have some magic jewels. If you reveal the magic jewels, there's going to be a special reaction. There's some really big reactions that you've never even seen yet. All right. So if someone could find the magic little cat again, our XRP DJ, we've got your reaction ready to go. I couldn't do it because we were playing the song. All right. But you can do it now, though. All right. 312. We need 500. We've got 9 minutes to go. Tap the like button. Get ready, folks. It's going to be a very, very exciting night tonight. 312. Oh, trading, what is that? Trading intraday Con Andy. Trading intraday Con Andy. Interesting name. All right. 314. We're not nearly there. Well, we're over halfway. Let's see. Anyway, let's go through our positions and then see what we got. So we'll come back to the likes in a minute. We want 500. So my portfolio, we were up 42 grand yesterday, down 34,000 today because of SpaceX. We're all in. The S&P has turned green. Good for SpaceX. I warned everyone, you will not get a bounce on Virgin Galactic. It will go down. Myself and 8 of the biggest retail investors in the world in Virgin Galactic are out. They're not buying this. They're putting the money into SpaceX. When the big money returns, when we can trim off SpaceX, it will go up. I said to you tonight, it will go down, but it won't bounce with SpaceX, and it hasn't. I was right. Okay. SpaceX has bounced, though. Not much, but it's just showing some signs. Palantir down, gold going up. Amazon is down, up after hours, exactly the same as SpaceX, funnily enough. Apple is down after hours. Enphase Energy, my top pick, for $100. Coca-Cola is down. This is a good reason why I sold for a wash. I did tell everybody on Discord, I am selling. I had about $350,000 of Coca-Cola. I've made 120 grand this year on Coca-Cola. I said enough is enough. I'm selling for a wash of what I had left. And I was right to do it because it's gone down because tech has gone up. A classic rotation. I put it all in SpaceX. A much bigger return on SpaceX. That's why I did it. Okie dokie. So I was right. Okay. J&J going up. Chevron Oil going up. Tesla going down. That's on SpaceX. Imagine they're taking it over. They want to see it go down because they're going to take it over. Google is up 0.6 after hours. Microsoft is down, but now coming up after hours. Meta hasn't recovered at all. Nvidia is up. I sold it at 220. I'm not buying it back here. Walmart is now an AI play. How long have we got now? 6 minutes to go. We can't start the call until we get 500 likes. We need 500 likes. Everybody, let's go back to the chart and see. We got 326 people. How many watching? 837. 837, and we've only got, that's it really, because 50% of you are signed in. That's really it. Oh, well. Okay, we can't really get any more than that, to be honest with you. 50% of people aren't signed in. So 846 is really as much as we're going to get. It's half of that. So 400 would be the max. So I'm happy. There's no point asking for more. You can't get any more. Everybody who signed in has given you a like. So let's get ready for the call. There's no point even bothering it anymore. Thank you ever so much, everybody who got behind the show tonight and supported it. We'll be live, of course, tomorrow with the SpaceX launch. Where else are you going to watch it? You can watch it on any other channel that covers SpaceX, but they will not show you their real trades, their real margin position, their real bank account. I will. You can watch a launch tomorrow night with somebody who actually owns the stock, up to $1 million on the line. Or you can watch some bros with baseball caps and headphones making it up, telling you what they've got, but they won't show you. I will show and share everything with you. I will answer everyone's question. We'll cover the live event, and you'll see me trade it live, and you'll see me win or lose live on the show. That's tomorrow night, SpaceX. But for now, here we go. This is Google earnings. This is the build-up. They are showing a video. As you can see, they're showing a video. There's no point covering this for copyright reasons. There's nothing going on there. They'll bring it to us in a minute. When this ends, we will go straight into the Google earnings. It'll be in 5 minutes, so please stand by. All they're showing right now is the build-up. This is copyright material, so I don't want to play it. I'm just going to bring you the live earnings call, which starts in 4 minutes from now. Okay, so Google is up in the after hours, and let's have a look. We are bouncing a lot now. Ooh, we are bouncing a lot now. We are up. Yes, we are bouncing. SpaceX is bouncing hard. We're up 0.6 now. Now, 0.6 might not sound a lot to you, but when you've got $1 million in it, it is, all right? So 0.6 of $1 million is quite a bit, and we are bouncing on the news tonight from Google. So this is exactly what I wanted. It was a big risk. It was tough to do it, but it had to be done. And there it is. So we're getting ready for Google. We're just doing the build up. There's nothing yet to see here. This is all copyright material. We don't want to play that, do we? All right. So we're bouncing up 0.7% now. 0.72. This could be a whole percentage point in a second, and that's a lot of money when you've got $1 million invested. So there you go. Google, are we going to get a margin call, or are we going straight to 1.5 or even $2 million? Right, let's have a look. Well, Google, we are now 3 minutes to go before the call. They're on time because we're already there with the build-up, okay?
Take a second.
There's the audio.
Or we've come.
There's the audio. We're climbing quickly now. SpaceX is moving. Google is moving. We've got 3 minutes to go. If everyone could tap the like button. If you'd like our newsletter and our Discord, if you want to see our live trades, we have the best Discord server in the world, and I mean that. We've got an award-winning newsletter, number 2 in the bestseller Substack. Our owner, Sensei, talks to Michael Burry, so that's pretty cool, right? Our membership awards, we've just received best practice and best value from YouTube. No price increase for 5 years. Our Discord is always 90% discount. No AI, no sponsorship, no ads, no bots, one-on-one support, live trading, big whales, small investors, all inside Discord. There is the link. We've got exactly 2 minutes to go. And it's only a couple of bucks just to cover the admin. I provide the services for free because I essentially make money from investing and doing the job. There's no sponsors here. No one sponsored the channel. The only channel you'll ever see on YouTube with over 100,000 subscribers with the verification tick, which means genuine and authentic, with no sponsors at all. All right? So here we go. We have got exactly 1.5 minutes to go. 1,000 people watching. Let's get ready. My portfolio is bouncing quickly. I've got $1 million into SpaceX for tomorrow night's event. Google, here comes the call. There's the music. Let me, I'm just going to mute it for you, but I'm going to listen in so I don't miss anything, okay? Let me do this now. Okay, I'm listening to the music to make sure I don't miss anything. Here comes the Google earnings. Stand by in 1 minute. They will be on time because Google are always on time. They're very good about that. Okay, here comes the Google earnings live now. We've got the CEO, Sundar from Google YouTube, live on the show with us tonight. We're going to present the Google earnings. It starts in 30 seconds. Please stand by. I've got $1 million on the line. I've gone all in 100%, one stock, one asset, all my margin, all external borrowing, $1 million on this, knowing that it would bounce tonight. And what is that stock? It is SpaceX. I am all in. It went down and down and down. Yesterday we were up 50 grand. Today we're down 30 odd grand, a swing of 80 grand in a 24-hour period. But that is how it goes when you invest. All right, let's get ready. Bloody, I've got an itchy nose. Sorry about that. Okay, here we go. Google starts any second now. There's nothing to see on the screen other than a blank screen. So we'll stay right where we are. Live Q&A coming up. All members' comments can be shared on the screen. SpaceX is bouncing. Google is waiting. Here we go.
Welcome, everyone. Thank you for standing by for the Alphabet second quarter 2026 earnings conference call. At this time, all participants are in listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's second quarter 2026 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Hi, everyone. Thanks for joining us. We have exciting momentum. Alphabet revenue grew 24% year over year. Our AI investments are redefining what's possible across every part of our business. Our momentum starts with search, where people are adopting one seamless search experience across AI overviews and AI mode. We saw 17% revenue growth in search and other, and YouTube ads grew 13%. Cloud revenue grew 82%, powered by strong demand for AI infrastructure and AI solutions. And cloud backlog grew to $514 billion. It's great to see the wide adoption of Gemini Enterprise, with nearly 90% of Fortune 100 using it. Today, I'll expand on our AI progress, our global product footprint led by search and YouTube, Google Cloud's leadership, and our long-term bets. First, AI. Yesterday, we announced new models, Gemini 3.6 Flash and 3.5 Flash Lite, which are cost-effective and highly efficient. We are seeing tons of demand for our workhorse Gemini Flash series because it hits the sweet spot of performance and cost. We also launched Gemini 3.5 Flash Cyber, which I'm really excited about. Paired with our CodeMender agent, it finds and fixes vulnerabilities and delivers performance at the frontier, comparable to far bigger cyber models. Gemini 3.5 Pro is currently in testing, and our team is already building the next generation of models. We have started our most ambitious pre-training run yet for Gemini 4 and are excited by the progress we are seeing at the frontier. Demand for our models is translating to strong token usage across developers and enterprise customers, and we continue to be supply constrained, a sign of momentum and rapid adoption. More than 9 million developers are building each month with our models across our APIs and key developer products. Our model APIs are now processing approximately 22 billion tokens per minute. That's up from 16 billion just a quarter ago. Additionally, this quarter, we launched Omni. It allows users to create anything from any input, starting with video. Since launching at I/O in May, there's been a 40% increase in daily active users creating videos on the Gemini app. Our Gemma family of open models, small enough to run on local devices, are hugely popular. These models have been downloaded over 900 million times, and our latest Gemma 4 models have been downloaded over 300 million times since launching in April. Our agentic development platform, Anti-Gravity, allows anyone to build in the agent-first era. It has more than 2.4 million weekly active users. Anti-Gravity is a powerful tool for users and enterprises, and it's completely accelerated how we build internally. As just one example, a team in Chrome is now on track to accelerate delivery by 8 times, compressing a 2-year timeline into 3 months through model-driven refactoring. Moving on to our global product footprint, which brings AI to more people than any other company. Starting with search, AI continues to drive an expansionary moment, with new experiences resonating with users and driving growth in queries. As a big football fan, I was particularly excited to see search usage hit an all-time high during the World Cup this year. This really highlights how much people turn to Google in moments that matter. We continue to make search more helpful and intuitive. We recently brought together AI overviews and AI mode into one seamless search experience that combines our frontier capabilities with the best of the web. And we are continuing to incorporate more frontier capabilities into search with agents, personal intelligence, and notebooks. Our AI-powered features are driving increased search usage. Since expanding AI mode globally last October, we have surpassed 1 billion monthly active users. And just like AI overviews, AI mode is driving an incremental increase in search queries overall, and we are now sending billions of clicks to websites every week through AI features in search. As we serve more of these queries, we've continued to drive efficiencies. Thanks to our engineering and hardware optimizations, this quarter we reduced the cost of AI mode responses to its lowest level since launch, even as we have brought more advanced AI capabilities. Philip will also talk more about how we are innovating the ads experience. Next, the Gemini app, which now has 950 million monthly active users, with daily active users tripling in the last year. Users love new agentic features like Daily Brief and our personalized agent, Gemini Spark, which is now available in the US and internationally. We've been shipping helpful new features like this at an incredible clip. On to YouTube. Month after month, when a big event happens in the world turns to YouTube. It's been incredible to see that over 1.7 billion unique viewers globally watched World Cup-related videos on YouTube during the FIFA World Cup 2026. We're also bringing the power of conversational AI directly into the YouTube experience. Ask YouTube uses our Gemini models to let people ask complex questions about individual videos, get quick takeaways, and jump straight to moments in those videos. The early engagement is encouraging. More than 140 million users engaged with Ask YouTube on the watch page in June 2026. And we are bringing that Ask experience to the wider search experience on YouTube. Next, cloud. Our continued momentum is driven by our integrated AI portfolio consisting of chips, models, data, security, and agent platforms, all designed to work together. Gemini continues to be a key driver of growth and is deeply integrated across all of our cloud products, including Gemini Enterprise, data analytics, cybersecurity, and Google Workspace. We are seeing strong, diversified demand across products, customers, geographies, and industries. Our product differentiation is driving expansion in 3 ways. We are winning new customers, more than doubling our acquisition velocity year over year. We are deepening our relationships with existing customers who are expanding their usage and exceeding their commitments by more than 50%. Also, an acceleration over last quarter. We are driving growth with partners, with transactions on Google Cloud Marketplace growing over 7 times year over year. One of the strongest parts of our growth comes from the rapid adoption of our Gemini Enterprise platform. It's differentiated with easy-to-use tools to build agents and automate processes, connectivity to enterprise systems, cost management, and governance tools. In Q2, Agent Development Kit, our framework for building and deploying enterprise AI agents, reached nearly 70 million total downloads. As I said, nearly 90% of Fortune 100 are using Gemini Enterprise. We have customers like PepsiCo for AI and analytics solutions, Intel to streamline core processes, HSBC for wealth management, Bell Canada for customer engagement, Macy's for commerce experiences, and Signal Iduna for knowledge management. More broadly, Gemini is transforming how millions of businesses use AI to build custom agents, automate processes, improve cybersecurity, manage customer relationships, streamline data analytics, collaborate effectively, and more. All of this momentum is driving growth in our paid token usage. Nearly 500 cloud customers have each processed more than 1 trillion tokens in the last year, and usage is so much deeper than that. Over the last 12 months, more than 2,000 enterprises consumed over 100 billion tokens. We're also seeing strong interest in our AI-powered security platform, which is differentiated because it integrates threat intelligence, cyber response prioritization with VES, AI automated scanning, code remediation, and monitoring. Today, 90% of Fortune 100 are Google Cloud security users. Nearly 90% of VIS customers are using AI-powered security features. And we have seen a more than 45% quarter-over-quarter increase in the number of AI workloads scanned and protected by our security platform. Our security tools are being used to protect critical infrastructure, including financial services organizations such as Morgan Stanley, telecommunication providers such as TELUS, healthcare organizations such as Texas Children's, software companies such as Atlassian, and several government agencies. And with our new Google AI Threat Defense, we are really excited to bring our new cyber model and code mender to help our customers defend against AI threats. All of this is powered by our leading AI infrastructure. We offer the industry's broadest range of accelerators from Google and NVIDIA, including the new NVIDIA Vera Rubin platform and TPU 8T and 8i, which delivers strong price performance. On top of this, let me mention 3 unique offerings. First, our Virgo network, which is designed to meet the needs of modern large-scale AI workloads. It allows customers to connect 1 million AI accelerators across multiple data center sites into a unified supercomputer. Second, our software stack has native support for JAX, PyTorch, vLLM, and SGLang, enabling workload portability across GPUs and TPUs. And third, our new agent-optimized Axion CPU provides 30% better performance per dollar compared to peer offerings. We are seeing strong growth in demand for our AI infrastructure offerings from leading labs such as Ineffable Intelligence, next-generation AI builders, including Kakao, financial services like Deutsche Börse Group, pharmaceutical companies such as Pfizer and Roche, and robotics and spatial intelligence companies such as World Labs. We are continuing our strategy of investing in promising companies and internal efforts that bring pioneering AI research into the real world. We have seen exciting progress from our other bets. Waymo introduced its newest vehicle, Ohio, to public riders. This is the first vehicle powered by the 6th-generation Waymo driver and will welcome more riders in the coming months. Wing has safely completed more than 1 million home deliveries, and we continue to grow our presence through partnerships with Walmart, DoorDash, and Papa John's. In health and drug discovery, Isomorphic Labs raised over $2 billion to power its AI drug design engine, scale globally, and advance its drug candidate pipeline. It's truly been an extraordinary first half of 2026, with much more to come. Thanks to all of our employees and partners worldwide for their incredible work this quarter. With that, Philip, over to you.
Thanks, Sundar, and hello, everyone. I'll start with a review of Google services, highlighting our momentum across search, YouTube, and partnerships. Google services revenues were $95 billion for the quarter, up 15% year-on-year, primarily driven by search. Search and other delivered 17% growth, with retail and finance driving the largest contributions. YouTube advertising revenues grew 13%, driven by direct response and brand. Network advertising revenues were down 1% year-on-year. Strong performance in search and YouTube underscores how our investments in AI translate into measurable value for our users and advertisers. Starting with search and other. Revenues reached over $63 billion for the quarter. Sundar highlighted the momentum we see in search, which directly impacts our advertising business. We continue to accelerate the deployment of Gemini across our entire ads infrastructure to boost performance in 3 areas mentioned before: ads quality, advertiser tools, and AI user experiences. First, ads quality. At Google Marketing Live, we showcased how Gemini improves query understanding, allowing us to find relevant ads for longer searches previously difficult to monetize. The core engine of our search ads relies on a dual prediction, delivering immediate utility for the user while maximizing measurable value for the advertiser. Gemini completely supercharges this capability. We use Gemini's advanced reasoning to decode the nuances of longer, more detailed queries. With shopping ads, for instance, we drove a 20% improvement in showing highly relevant ads, helping shoppers immediately find the best match. Second, advertiser tools. Take AI Max. It has become the core building block for advertisers to fully participate in our new AI experiences. It's out of beta, and 500,000 advertisers have already adopted it. Those who adopt our AI-powered campaigns like AI Max or PMax see an average of 15% more conversions or value on search at a similar ROAS. AAA Auto Club enterprises used AI Max to personalize creative assets and capture growth from increasingly detailed insurance searches. This led to a 17% improvement in conversion volume and an 11% decrease in cost per lead. We see strong adoption of our generative AI creative tools, which makes creative development easier, especially for SMBs. In fact, over half of our SMB customers globally use AI to create or optimize their creatives. Third, new AI user experiences. At I/O, we showed how search, including AI overviews and AI mode, works as one connected experience. As you saw from our results, our performance across this holistic system is robust. We continue to be encouraged with monetization performance on queries that show AI overviews, even as we've expanded AI overviews to more commercial queries. Across AI overviews and AI mode, people are asking more specific and detailed questions, providing opportunities for more relevant ads. Within AI mode, we continue to test and deploy a range of new ad formats. For text ads, we improved performance by adding contextual site links based on the conversation. Direct offers is gaining momentum with partners like IHG Hotels and Resorts soon surfacing special offers during trip planning. In highlighted answers, our latest experience, placing clearly marked sponsored links inside list responses, is showing early user traction. Looking at commerce. In collaboration with the retail industry, we established the Open Source Universal Commerce Protocol, UCP, as the new standard for agentic commerce. Merchants are rapidly adopting UCP, with Target and Steve Madden now live, while new members have joined the UCP Shopping and Food Tech Councils to help steer its vision. We also announced Universal Cart, allowing shoppers to add items from different retailers across Google services and buy in a single checkout. Now onto YouTube. As a FIFA preferred platform partner, we help fans around the world tune into the games. As Sundar mentioned, over 1.7 billion unique viewers watched World Cup-related videos, and over 550 million watched them on their televisions. This made the FIFA World Cup 2026 the most viewed World Cup in YouTube history. Advertisers connected with fans through FIFA channel takeovers, Gemini-powered soccer-themed sponsorships, and game day mastheads. And, of course, a huge congratulations to Spain for taking home the trophy. More broadly, on YouTube, we introduced an exclusive slate of creator shows, making it easier for brands to tap into the fandom of creators. We launched custom sponsorships to put brands at the heart of the world's biggest moments as they unfold on YouTube, using AI to dynamically surface videos tailored to a brand's desired moment. Brands continue to partner with YouTube creators to engage new audiences. Kate Spade reached Gen Z through a first-of-its-kind YouTube creator campaign and partnered with creators Ellie Thuman and Hannah Meloche. By leveraging multiple format videos on YouTube, the brand drove a 3.25% brand lift in purchase intent. This unique convergence of brand equity and commercial action makes YouTube a powerful full-funnel platform. SMBs continue to fuel our direct response growth through campaigns like Demand Gen. They leverage our AI to scale visual storytelling across YouTube, Shorts, and now Google Maps. To attract high-value shoppers across North America and Europe, outdoor brand Arc'teryx used Demand Gen to achieve a 70% better return on their ad spend compared to other paid channels. Looking at monetization across YouTube, we're driving sustained growth across our key priorities. In the living room, we see continued momentum across both brand and direct response. With the launch of Buy with Google Pay, viewers can complete purchases directly on their CTV, turning the TV screen into a stronger performance surface. Shorts continues to deliver high-performing opportunities for social and video buyers alike. Beyond advertising, YouTube subscription business, which thrives across living room screens, is growing faster than ads, particularly driven by YouTube Music and Premium. Internally, we leverage Gemini to transform how we work and how we serve our customers. 83% of our sales team uses Gemini-assisted tools weekly, driving up to a 20% higher win rate when using customized pitch narratives. Our ads customer support teams use Gemini-powered agentic solutions that now autonomously address 75% of support queries, freeing them to solve our customers' most complex challenges. Similarly, our new agentic solutions for SMBs have expanded our reach by hundreds of thousands of new customers year to date. As always, ending with partnerships. We're seeing more businesses benefit from the unified strength of Google's AI stack. Booking Holdings expanded a multi-year cloud commitment and are partnering closely to advance our AI-powered ad formats. It's also deploying Google's AI technology to enable new customer experiences like agentic dining reservations on OpenTable, helping restaurants get discovered and booked right when it matters most. In closing, I'd like to thank Googlers everywhere for their contributions to our success and our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the second quarter, unless I state otherwise. I will start with results at the Alphabet level and will then cover our segment's result. I'll end with some commentary on our outlook for the third quarter and full year 2026. We had an outstanding second quarter, delivering our 12th consecutive quarter of double-digit revenue growth. Consolidated revenues were $119.8 billion, up 24% or 23% in constant currency. Total cost of revenues was $45.9 billion, up 18%. Tech was $16.2 billion, up 10%. Other cost of revenues was $29.8 billion, up 22%, driven by increases in depreciation, inventory costs, primarily from the sales of TPU systems to customers, and content acquisition costs, largely for YouTube. Total operating expenses were up 27% to $33.1 billion. R&D expenses increased by 32%, driven by compensation from investments in AI talent, as well as depreciation. Sales and marketing expenses were up 18% due to investments to support the Gemini app and search and compensation. And G&A expenses increased 24%, primarily driven by compensation and charges for certain legal and other matters. Operating income increased 30% to $40.8 billion, and operating margin was 34%. Other income and expenses was $98 billion, representing a substantial increase from the prior year, primarily due to unrealized gains in our equities securities portfolio. Net income and earnings per share increased significantly, primarily due to the unrealized gains in OI&E I just mentioned. We generated strong operating cash flow of $39.1 billion in the second quarter and $185.7 billion for the trailing 12 months. CapEx was $44.9 billion in the second quarter, with the vast majority of the spend in technical infrastructure to support our investments in AI. Approximately 60% of our investment in technical infrastructure this quarter was in servers, and 40% was in data centers and networking equipment. We had negative free cash flow of $5.9 billion in the second quarter, driven by our investments in CapEx. Free cash flow was $53.3 billion for the trailing 12 months. We ended the quarter with $242.5 billion in cash and marketable securities, which includes $87.1 billion of marketable equity securities. Long-term debt was $98.2 billion. And as mentioned in our press release, our board of directors declared a quarterly cash dividend on our common stock of 22 cents per share, which is payable in September. Turning to segment results, Google Services revenues increased 15% to $94.5 billion, reflecting strong growth in search and subscriptions. Total advertising revenues were up 14%, with growth across all major verticals. We experienced strong ad growth related to the World Cup, particularly in YouTube ads. Google Search and other advertising revenues increased by 17% to $63.3 billion, with retail and finance driving the largest contributions. YouTube advertising revenues increased 13% to $11.1 billion, driven by direct response advertising, as well as brand, with strength in the living room, as Philip mentioned earlier. Network advertising revenues of $7.3 billion were down 1%. Subscription, platforms, and devices revenues increased 15% this quarter to $12.9 billion due to strong growth in both YouTube subscriptions, particularly YouTube Music and Premium, and Google One, which was driven by demand for AI plans. Google Services operating income increased 20% to $39.5 billion, and operating margin was 41.8%. The Google Cloud segment delivered outstanding results in the second quarter, driven by our enterprise AI products and services. Cloud revenues were up 82% to $24.8 billion, driven primarily by GCP, which grew faster than cloud overall. Core GCP, AI solutions, and AI infrastructure were all important drivers of growth. We also began to recognize revenues from TPU system sales, which we delivered to customer data centers for the first time in Q2. Cloud revenue growth accelerated meaningfully even after excluding the impact of TPU system sales. Cloud operating income was $8.8 billion, more than tripling year over year, and operating margin increased from 20.7% in the second quarter last year to 35.6%. Google Cloud's backlog increased by more than $50 billion sequentially, reaching $514 billion in the second quarter. The increase was driven by strong demand for our enterprise AI offerings. The majority of the backlog is related to typical GCP contracts from a broad mix of customers, and we expect to recognize just over 50% of the total backlog as revenue over the next 24 months. In other bets, revenues were $382 million, and operating loss was $1.8 billion as we continue to expand Waymo's business and invest in key other bets. And in Alphabet-level activities, the operating loss was $5.8 billion, driven by shared AI R&D expenses. Turning to our outlook and business performance expectations in the second half of 2026. First, in terms of revenues, at the current spot rates, we would expect a slight FX headwind to our consolidated revenue in Q3 compared to a 1 percentage point FX tailwind in Q2. This impact will be seen primarily in search and YouTube ads. In Google Services, as Philip mentioned, we continue to benefit from innovation in search by improving the user and advertiser experience with AI. At the same time, in Q3, we will begin lapping an acceleration in search performance that began in the third quarter last year. In Google Cloud, we're seeing significant demand for products and services, which we expect to drive strong growth. As I mentioned earlier, we started delivering TPU system to customer data centers in the second quarter. We continue to expect to recognize a relatively small portion of the revenues from our existing TPU system sales agreements this year, ramping as we exit 2026. We anticipate the vast majority of the revenues from these agreements will be realized in 2027. And given the supply-constrained environment, we plan to expand the use of third-party capacity in Q3 as a bridging strategy while we build out more internal capacity. This strategy allows us to keep growing our customer base and capture greater overall value. However, it will create modest margin pressure in the near term as we utilize this capacity. Moving to investments, we are updating our full year 2026 CapEx guidance range to $195 to $205 billion, up from our previous estimate of $180 to $190 billion. The increase in the range is primarily due to an acceleration in the delivery of capacity to meet growing demand. As we previously shared, we continue to expect our CapEx to increase significantly in 2027 and will provide more details at a later date. In terms of expenses, the significant increase in our investments in technical infrastructure will continue to put pressure on the P&L in the form of higher depreciation expense and related data center operations costs such as energy. We also expect to continue hiring in key investment areas such as AI and cloud. And we are investing in marketing to support our AI products. And finally, we expect the free cash flow will remain under pressure, driven by our investments in technical infrastructure, which enables us to capitalize on the AI opportunity and continue to drive attractive returns. Q2 represented another strong quarter. Our teams continue to deliver impressive innovation, executing with discipline and velocity. I want to take this opportunity to thank our employees for their contribution to our performance. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder to ask a question,
Well, we
you'll need to
listen.
press
If
star
you would
one on
like
your
a
telephone.
studio tour
Prevent
of
any
all
background
behind the
noise,
scenes
we
of the
ask that you
studio,
please mute your
just
line
vote in
once
the
your
poll
question
and
has
I'll
been
share it with
stated.
you. We're getting
Our
ready
first
for
question
our
comes
big
from
event
Brian
tomorrow night.
Nowak with
We are
Morgan
covering the
Stanley. Your line
SpaceX
is now
launch.
open.
$1 million I've just
Thanks for taking my
invested in the
questions. I have
stock.
two,
We'll share
one
it
for
all
Sundar,
with
one
you.
for Anat. Sundar,
I'm
with,
setting it up now.
With more time and Gen AI products and tools in the market and investment continuing to step up, can you just kind of give us some perspective on how your view on the size of the overall Gen AI ROIC opportunity and the timing of the ROIC has changed now versus 1 year ago? And then Anat, you talked quite a bit about supply capacity constraints. Maybe a similar question for you around forward CapEx. How is your budgeting philosophy and just constraints you're putting onto forward spend? How are those changing as you sort of think about the right amount to spend in 2027 to close this capacity constraint?
Look, thanks, Brian. I mean, it's a good question. I do think it feels like we are in very early innings of what feels like secular shift across multiple areas. In our core information businesses, just the possibilities when I see what all you can do with the absolute frontier capabilities, there's still a lot of work ahead to translate all that into experiences for our consumer users. You can think about end-to-end agentic experiences to really meaningfully do a lot more for them. So all of that looks like extraordinary opportunities with extraordinary returns for executing well on those opportunities. Similarly, on the enterprise side, as you can see from our demand, which is reflected in our growth rates, et cetera. Again, in my conversations with many CEOs, many companies, they're all still, barely scratching the early stages of what's possible here. So I think, we used to talk about cloud itself, very few, small percentage of overall workloads in enterprises have shifted to cloud. Now think about what percentage of workloads are really AI native and AI enabled. It again feels like very, very early. So I would say, from an ROIC standpoint, I think, we are taking a full stack approach. We are seeing momentum across consumers and enterprises and developers and so on. So it feels like, if anything, over the past year, we've gotten more bullish on the opportunities ahead. I'll turn it over to Anat.
Thanks for the question on how do we think about forward-looking CapEx in the context of supply constraints. So we're still in a supply constraint environment. I think we've said this now for multiple quarters in a row. And we are seeing very strong demand, both from external cloud customers as well as across the business. And our goal is to invest as long as we see an attractive return on that investment, as Sundar mentioned earlier. We do take a long-term view, so we take multi-year view at what the needs are, as well as focus on next year and the near term and building aggressively to meet those demands. And as you've seen, well, we have increased our capacity quite significantly over the past 3 years. The demand still outpaces that investment. And we are, just the rest of the industry, working in a supply-constrained environment. So we're working hard to do this. We do have a benefit of having the full-stack approach, so we're able to drive operational efficiencies, technological efficiencies within our technical infrastructure organization so that we can deliver more compute. But as long as we see these attractive opportunities to invest, we will continue to invest.
Thank you both.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks for taking the questions. One for Sundar and one for Anat. Sundar, can you just talk about your confidence level that the Gemini models can remain at the frontier? I know you had the Flash model releases this week, but Google perhaps doesn't make maybe quite as much noise as some of the other leading labs, or perhaps have quite the frequency. Just curious how you'd address any concerns about that ability to continue developing leading models. And then just related, can you talk about your plans for coding and how you look to close the gap in that part of enterprise? And then Anat, just following the recent equity and debt raises, can you just help us understand how you think about optimal capital structure and how you view the cost of debt versus equity? Thanks.
Thanks, Doug. Look, I think the frontier is incredibly dynamic space, and it's fiercely moving forward. At any given moment, when you take a snapshot, it feels dynamic. We have had clearly frontier models. There are many attributes on which we are still at the frontier. There are areas where we've acknowledged we need to improve. Coding and agentic coding is an example of that, and I think the teams are very, very focused on it. With 3.6 Flash, and by the way, Flash is our workhorse model, and we see tremendous demand for it, given it generally hits a sweet spot of performance, cost, reliability, latency, etc. And we've incorporated, Gemini and Flash particularly in our entire portfolio of solutions, be it in cybersecurity, data analytics. If you think about an area like customer service, you need really good voice quality, you need live streaming, you need the ability to reason on that. Or if you're a professional services firm, you need high quality summarization, content generation, etc. So, Flash does very well on all of that. In terms of agentic coding, we are iterating, and you will see us make continued iterations. 3.6 Flash, for example, compared to 3.5 Flash, jumped over, over 10 points in deep SWE as a benchmark, and it is more token efficient doing so. So we are clearly, we are using it internally. We are testing it with many customers in coding. So we see the progress just in 6 weeks from the prior version to the new version, and you will see more continued iterations on that as well. In terms of the frontier, we are both very committed and very confident of being at the frontier. For the next generation of frontier, you're going to need much larger base models. We are now training Gemini 4, and we're being very ambitious with it. I am very excited by the progress I'm seeing internally on Gemini 4, and I'm confident the people will be pleased when we are putting it outside. But we will need Gemini 4 as a larger base model to compete at that frontier level, and so we are focused on executing on that well.
And on the question regarding our capital structure and recent equity and debt raise, so as we think about our investment needs, and as I said, we look at the next year and multiple years out, we first look at how much we can support based on cash from operations. And as you've seen in our results today, we continue to generate very healthy, strong cash flow from operations. So that's our first source of funding. And then we look at debt, and most recently we did the equity raise. And we have expanded our debt portfolio quite significantly over the past 12 months. If you've seen a year ago, we were at about $16 billion, and we went to about $100 billion across multiple currencies and geographies. So we're expanding that portfolio. But we also want to make sure we have a resilient, not just growth outlook, but also a resilient balance sheet and a strong balance sheet, healthy balance sheet. which is the rationale behind expanding into the equity markets. At this point, we're not planning to go back to the equity markets, with the exception of, as you recall, part of our equity offering was the ATM or at the market offering that we will do to address the stock-based comp or the tax on SBC, which we'll do for some period of time. But we look at those three dimensions: the cash flow from operations, debt levels, and equity, in a way to balance it in a way that ensures that we continue to maintain a healthy balance sheet.
Thank you both.
Our next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thanks so much for taking the questions. Maybe two, if I could, both on TPUs. Sundar, can you talk about some of your key learnings as you scale your TPU efforts in terms of both the demand for TPUs and how you think about balancing the external demands for TPUs versus the internal demand for custom silicon inside the organization as you look over the next couple of years? And then, Anat, if I could just follow up, you made some comments in your prepared remarks about the impact of TPUs on Google Cloud. I didn't know if you could give us a little bit more granularity about the size of TPUs as a part of the revenue backlog and how to think about the revenue recognition or the potential for margin impact from TPUs in the years ahead. Thanks so much.
Okay, I think in terms of, first of all, we are very pleased with our TPU roadmap progress. And you know, the value in terms of performance, you know, and the edge it gives, and we obviously use it extensively. In terms of allocating TPUs, look, our first priority is making sure we are allocating what we need to compete at the frontier in terms of AGI development, and so that is the foundation for everything we do. But you know, given the extraordinary demand, to balance the external demand, even for most cloud customers, we are using, you know, both TPUs and GPUs mainly for serving our models. So think Vertex AI, Gemini Enterprise, the momentum we see. So we're using it or agentic workloads, etc. So we are using it for those purposes. To the extent people want it as infrastructure, you know, we are balancing it by increasingly looking at opportunities to put TPUs in their data centers or in other data centers, like the project we are doing with Blackstone, etc. So we are using that as an ability to balance and make sure you know, we are allocating as much of the available compute for frontier model development, as well as serving both our consumer business and our enterprise business in terms of first-party models.
And in terms of revenue recognition and how we look at the TPU system sales, so the way to think about it is the following. When we sign the agreements that I've mentioned in the prepared remarks, they would be then reflected in the cloud backlog. Now, the vast majority of the $514 billion of cloud backlog is the GCP agreements, but the TPU system sales are reflected in that backlog. We start building inventory to be able to sell those systems. So you see that impact on the cash from operations because we built ahead, obviously, as we're building that business and ramping up. And then once we start delivering the sales, generally, that's when we start recognizing revenue. This quarter was a small amount of the total, that total agreement. Will continue to ramp up throughout 2026, but then you'll see the vast majority of the revenue from that agreements come through in 2027.
Your next question comes from Ross Sandler with Barclays. Your line is now open.
Yeah, just back to the AI model kind of war that's going on, Sundar. Just want to ask about like the speed of model releases and how you can potentially speed up the cadence by which Gemini is releasing models. So we all saw the third-party compute deal with SpaceX. What else are we doing to kind of speed up the pace of model releases compared to some of the other folks out there? And then you just mentioned the flash models, which have been very successful, to your point. Do you view that as like the right end of the market to be in, given how crowded the lower cost end of the model space has become? Just any thoughts on how you see all that playing out?
Thanks, Ross. Look, I mean, two things I'll say. First of all, we are, we really think about the Pareto frontier. We want to make sure for our customers, we are offering, best models at various price points, right? So, you will see us. But it's very important to us to have the best frontier models out there, as well as models which are very performant and low cost. This is why we have Flashlight, Flash, Pro, etc. And with so we are committed to being at the full Pareto frontier. On the speed of model releases, I do think you will see us continue to pick up pace. Obviously you've seen us come with we announced 3.5 Flash at I/O. We have followed that up with 3.6 Flash, and you'll see continued iterations of that model with further progress in agentic coding, etc. We are really focused, putting a lot of effort into Gemini 4. It's a very ambitious effort. We wanted to compete at the frontier level of where the frontier will be when Gemini 4 comes out. And so we are applying a lot of our compute and effort in that direction. But with that, we are creating a baseline on top of which you will see us rapidly iterate with subsequent model releases. And so, picking up pace and releasing models, almost at a monthly cadence is part of our roadmap as we are building Gemini 4 as well.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thank you.
Tomorrow night, we're covering the live Starship Flight 13, $1 million all in. The link's in the chat, pinned to the top. Click on it now, bookmark it, like and share, and join us live. Deep dive, live flight, $1 million on the line. Join us. It's going to be explosive. Not literally, I hope.
What gives you the edge to keep growing like you're doing? And then, Anat, back to Eric's question, anything you tell about the margin impact on TPUs going forward, right? Is it incremental margin to the core cloud margin, or is it a lower margin from the group? Thanks.
Look, Michael, I mean, first of all, look, there are many layers at which we are providing solutions, right? I think part of what the value of our full stack approach is, customers are coming to us for solutions. So if you take an area like cybersecurity or data analytics, people are deploying solutions in which models are an ingredient in that solution, right? So take cyber, people are using Chronicle and Viz, and with our upcoming CodeMender product, they're using it to detect and patch vulnerabilities and so on. Or take data analytics, people are bringing what's been in the past siloed data sources, putting it all together, and having an intelligence layer on top of it with Gemini Enterprise. And so the model is just an ingredient in those solutions. So I think it's important to remember that. Then even within where you're purely on a more model consumption area, people are, there is what looks as models are increasingly becoming end-to-end orchestrated systems, right? Workflows, agentic workflows. And to develop all this, it's your ability not just to bring the compute you need to train and serve, the data quality, the environments you have, your ability to continually improve, provide customers with that peace of mind that all the data they have, their data, their trajectories are confidential to them. None of that in any way flows back to the models. Their ability to configure and serve all this in a secure way and manage it and provision it and so on. So these are big end-to-end things. And so this is what our cloud business as a whole is focused on building it. And, and we are seeing demand across all of these components. And so obviously having our own models allows us to really optimize these solutions and bring an integrated offering. But we will also provide other models as part of these solutions. We also bring infrastructure as part of these solutions, etc., and take a whole full stack approach. So I think we are very, very well positioned there.
And on the TPU margins, we don't break out margins for any specific products or infrastructure component. And certainly there are benefits from designing and manufacturing our own chips. But the way to think about it is this is an expansion of our total addressable market. So it expands the opportunities by providing solutions to customers that need those systems in their data centers. But overall, if you think about the cloud margins, obviously a really fantastic expansion of margin to 35.6% this quarter, outstanding, strong operational discipline across the business and leveraging growth in the top line. And now as you think about Q3 and through the remainder of the year, and I've mentioned some of it in the prepared remarks, given the supply constraint environment we're in, we are planning to expand the use of third-party capacity in Q3 as a bridging strategy while we continue to build out internal capacity. That capacity, given the cost of that capacity, will put some pressure on operating margins for cloud. And then the last item we mentioned in the past was the integration of Wiz does create some headwind here in the near term in 2026 related to the acquisition.
Thanks, guys.
Your next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the questions. Anat, just on these third-party deals and kind of the bridge and capacity, is there a particular objective where the constraints are most severe, or is it really broad-based? And I guess, stepping back a bit and thinking about capacity allocation across the businesses, has that changed at all, or is there a way to contextualize how you're now thinking about the trade-off between allocating compute to search versus model training versus for the GCP business? Thank you.
Mark, I can comment on it. Look, again, on allocation, I think, the baseline with which we start is what it takes to, continue AGI development at the frontier. Obviously, the priors on that are just based on where the model frontier moves. And so we start with that as a baseline. And beyond that, we want to obviously, we are prioritizing our core product areas like search, YouTube, etc., as well as cloud. And within cloud, we are prioritizing the compute to make sure we can serve our models, in the context of Vertex and Gemini Enterprise and our core solutions, be it in data analytics and cybersecurity, etc. Right? So our core serving for our core products across consumers and enterprises where the compute is primarily going, and that's how we think about it. I think on the bridge deal, the main thing I would say is, look, there are on the margin, there are very, very large customers of ours on cloud who we are trying to support them through this extraordinary moment, and the incremental opportunities they are bringing to us, while a short-term cost over a few months may be very high, in the lifetime of the deal, as we bring more capacity on, is highly ROI positive, right? So those are factors we are taking into account. So are you willing to, take upfront 6-month deal to be able to serve that customer in what is a multi-year opportunity where the margins and the returns are very, very attractive over that multi-year horizon? So hopefully that gives some color on how we thought about those opportunities.
Your next question comes from Ron Josey with Citi. Your line is now open.
Great, thanks for taking the question. Maybe I'll switch topics somewhat and Philip, ask you a little bit more about monetization from a search and YouTube perspective. Just given the greater signal we have with AI searches, and then you talked about YouTube's strength. Talk to us a little bit more on how advertisers are leveraging the greater personalization and targeting that Google has to drive this ROAS. And a question we often get is, Google is at size and scale, we're still growing 17%. Any reasons what's driving that all-time high on searches? Thank you.
Yes, thank you so much for the question. Look, our 17% year-over-year growth rate in the Q2 search and other revenues was really driven by many parts of our business working well together and very, very deep Gemini integration. maybe to zoom out for a second, all the major verticals contributed to the growth. Retail drove the greatest contribution, managed, followed by really meaningful contributions from finance, tech, media, entertainment, and so on. I think it's really important to understand that Gemini supercharges our ability, and this goes specifically to your question, to understand what people are looking for and match the right ads. So we're applying Gemini models really across our entire ads infrastructure, whether it's ads quality, advertising tools, ads and new AI experiences. And we're really deeply integrating Gemini into the customer tools to make the campaigns more efficient, which comes on top of this. And then we have our AI-powered campaigns like AI Max that help advertisers actually adapt and find the opportunities beyond keyword. Again, that's an ability for us to go deeper and target better. And AI Max continues to unlock, we mentioned this, billions of net new searches that weren't really monetizable before. And then on the YouTube side, high level, the ads growth was driven by direct response and brand advertising. I shared earlier, we continue to see a lot of momentum in the living room. We have a really exciting ads roadmap as well ahead of us on the brand side, on the direct response side. Demand gen and shorts remain really interesting opportunities here. Again, this has targeting components to it, obviously. And we continue to innovate really heavily in direct response with shoppable ad formats in the living room, which will help us drive strength in retail as well.
Your next question comes from Ken Goralski with Wells Fargo. Your line is now open.
Thank you very much. Two questions, please. First, how would you assess the forecasted returns on compute capacity investments in 27 compared to prior years, 25 and 26, in light of the supply chain constraints and supply chain inflation we're seeing? I'm curious as to how you think about the return profile of 27 and kind of future investments versus past investments in capacity. And the second one, a little different topic here. When you think about Waymo, what are the key factors you would consider when evaluating a change in corporate structure for Waymo? I know you've previously been reticent to talk about this, but the business is scaling. Clearly, there's leadership there and has a lot of momentum. Under what conditions would it make sense for Waymo to live outside of Alphabet? Thank you.
Look, Ken, on your first question, if I understand it, we are working off a discipline ROIC framework here. Obviously, we, to the extent that our input costs going up to us, we reflect that, in our ability to, price our solutions and see returns there. So all of that is factored into how we are planning. I think our compute capacity investments in 27, I think to the first question I answered, I think we are, we are seeing strong demand indicators, including long-term deals, the existing deals which we have, which are renewing with exceptional demand on a moving forward basis. And so we are using all that to plan and invest accordingly. And so, I think if anything, the dynamics look healthier than where we were about a year ago. And so that's what gives us the confidence to undertake those investments. On Waymo, look, I think we are really focused on executing and scaling up Waymo. We have set it up with our bet structure and given the team a lot of support. Alphabet has continued. I think our ability to think and plan long term and invest in the business is and give them that long-term roadmap. The confidence in undertaking a long-term roadmap and scaling up, I think is all hugely valuable. We're really focused on scaling the business right now and executing to that extraordinary potential, and that's what we are focused on.
Thank you very much.
Our last question comes from Shrita Kajuria with Wolfe Research. Your line is now open.
Okay, thanks a lot for taking my questions. Could I please ask you two? One is on TPU long-term strategy. Longer term, is it fair to think that as TPU sales scale, you'd build merchant silicon business with a software stack that goes with it? And second is on YouTube revenue. Given how strong engagement is, what are some of the factors that could drive accelerating growth rate at YouTube on a go-forward basis? Thank you.
Maybe I'll answer the first one, and Philip can broadly talk about YouTube revenue growth as well. On the first one on TPUs, look, I think we've been operating with TPUs for a while. A lot of our cloud serving is done on TPUs, and we are also seeing strong demand for TPUs as standalone systems from other customers. And so obviously the industry has constraints too. So we have to plan and we allocate on a forward-looking basis along the principles I spoke about earlier. So I don't want to project out too far into the future there, but I do think we are, obviously we will scale up based on the opportunities we see and the demand we see, commensurate with the constraints that exist and the allocation needs we have for frontier model development, making sure we can serve our consumer businesses and enterprise businesses well. And Philip, you want to add on YouTube monetization?
Yes, thank you so much. So look, I mentioned it, the drivers of YouTube ads revenue growth. I think there's a lot of things we're actually excited about when we look at our ads roadmap here. In brand, we see ongoing opportunities on connected TVs in the living room. We're building tools to help advertisers find creators, scale across screens, and then measure the results. And we have a slate of new and returning creator shows that are coming exclusively to YouTube. We see opportunities in direct response, particularly with demand gen, and shorts. I mentioned it remain a really interesting opportunity here to expand our base to more small and medium advertisers across more verticals, shorter videos. Actually, this important one, create more opportunities for less disruptive ads, increasing the overall ad effectiveness. So we're going to continue to see a lot of innovation, in my opinion, in direct response with shoppable ad formats in the living room, which, again, we mentioned that drives retail strength. We announced a few other formats here at Brandcast. We announced Buy with Google Pay to enable CTV viewers to actually complete purchases directly on their TV with 2 clicks, which is a really interesting opportunity over time. We launched the Affiliate Partnership Boost to drive incremental sales and the creator earnings, obviously, from YouTube shopping affiliate commissions. So overall, frankly, very, very exciting times.
Thanks, Sundar. Thanks, Philip.
Thank you. And that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our third quarter 2026 call. Thank you and have a good evening.
Right, let's wrap this up. What a night. So everything I heard there was good. As expected, I work for Google. I work for YouTube, obviously. The ad revenue was good. I made a big, bold move tonight. I put $1 million all in on SpaceX. One stock, one asset, all margin, all outside borrowing, all in for tomorrow's launch. $1 million. We're all in on one stock. Currently down a lot of money at the moment. Started buying around about the 137, 140, and I've been doubling all the way down. Tonight's Google report was good for me. Google owns SpaceX. They never mentioned it. It's a small part, really, but it would have been nice for a mention, but they didn't. I was listening out for it. So here's... there you can see 32 grand down today. I was at 42,000 yesterday. I'm down 32,000 today. preparing for a major event tomorrow. Everything on Google sounds great. It's expensive though. There will be a pullback before we see an accelerate. I want to thank everyone who tapped the like button tonight. We nearly hit 500. I was trying to get to 500 likes. We got to 462. Thank you ever so much. And thank you ever so much everyone who subscribed. We gained about 200 subscribers tonight, which is very nice. It's a nice little thing, isn't it? Anyway, this is what comes next. This is going to be massive. If you want to join us for a special live event of Starship 13 launch with $1 million in play, I could be up $1 million tomorrow. We could double our position. I mean, it could be because I'm in margin, so it could amplify that. This is the event tomorrow. If you want to go there now, tap a like and click reminder. You might want to share it on social media. There's the event. You might want to join us for this tomorrow night. We're going to do a deep dive, a special. We're going to go through all the numbers and we're going to look at it. Is it a good business to buy? And then we're going to cover the launch live. It's going to be fantastic. Of course, if we get a delay or a problem or it blows up, not going to be quite so good for me. I've got to be honest, but you don't win without taking chances. And I've decided to go all in, and that is what I'm doing. Hopefully you'll join me for the event. It's going to be very exciting indeed. I'm really kind of looking forward to the event itself. I'm not worried, but of course I can't control what happens to a rocket. Anyway, what we're going to do now is there's no Discord event tonight because we had an extended show with this. I'll see you back in the morning. We've got more from Vaz, who's live at the biggest air show in the world. We are press media alongside BBC, Sky News, Fox, CNN. We are there bringing you all the live news. Today we had new product launches. The public haven't seen it yet. We were there bringing it to you. Go and check that out. If you've enjoyed the show and you like a souvenir, underneath the video, you can see running along the bottom of the video is all the merchandise. You have t-shirts and hats and all kinds of great stuff. If you want the links, there's X if you want further information. Oh, hang on a minute. Someone has just found the Bold Eagle.
100 jewels.
Eagle, congratulations! You just found one of the magic jewels that supports the channel, and also you get a little surprise as well. We've got Mark. Hello, Malik. Welcome to you. So if you want to follow me on X, you'll get all of my information for the build-up tomorrow on SpaceX. $1 million invested. There's my Instagram if you want to go behind the scenes for the personal stuff. There might be some personal stuff tonight shared on Instagram. If you want all the software, Seeking Alpha and Alpha Spread, free shares in Robinhood, free shares in Robinhood USA, and free shares in Robinhood UK, there is the link there. I'm not sponsored by anybody. I turn down sponsorship every day. 50 grand a day I get offered. I don't want to be a sponsored channel. I make money investing. I want to just help people with our Discord server and all the other good stuff. There's our award-winning newsletter. We had the verification tick from YouTube, which means we are genuine and authentic. We've won the award for best value as well for memberships, 5 years in a row, no increases, no inflation, and we provide the best level of service. We're very proud of that. Right, that's it from me. What I'm going to do now is you've all got the link for tomorrow's event. Where am I going to send you now? Am I going to send you to tomorrow night's event, or am I going to send you to the extra channel? Because from there I can give you the link, can't I? We're live there now doing a repeat on the day's events. Yes. Sending you now to the extra channel where we're going to recap today's events for you, and I will send you there now. We'll take you there automatically, and you can catch up with the day's events live now on Extra. That's it from me. No Discord event tonight. If anyone clicks the Discord link, I will go and onboard you and get ready for those trades, get ready for those moves. Alejandro, nice to have you here. We're here to help people, support people, be the most honest, genuine channel on YouTube TV. So I'm all in. $1 million with SpaceX. Tomorrow's going to be a massive day. Let's hope the weather's good. Let's hope that the Starship 13 goes off well. And we're going to go down to Boca Chica and touch the rocket soon. We've got friends who work there, and we're going to go up and see it. So a little event we're putting on for all the members, something kind of cool. Anyway, that's it from me. Have a wonderful, wonderful evening. I wish everyone the best of luck tomorrow. It's going to be very dramatic, and I'll see you in the morning. Have a very peaceful night. Look out for Discord for the trades throughout the night. Do expect to see some movement tonight. I'm not confirming it, but there could be some movement around 2 or 3 o'clock again. I think some institutions are going after that report tonight to buy SpaceX. See if I'm right. Be careful if you're trying to make money on Virgin Galactic at the moment. The big money's left it again, and it's being pummeled again. So be very careful chasing it. I think you're better off with SpaceX, which is why I've done it. But we are getting a nice bounce after hours tonight. Virgin Galactic's bouncing exactly the same as well. In fact, slightly more tonight. So anyway, look out for the overnight action, and I'll see you all in the morning. That's it from me. Till next time, as always. Oh, Electrum 2. Yes, Electrum 2, Terry Rose. Absolutely. All of my moves, all of my trades, all on Electrum. Yes, I've been posting them all day. Hopefully you've been watching them. If you've turned on email notification from YouTube, you'll get them emailed to you as well. But on the community tab, I've been sharing about, oh my God, 200-300 grand today worth of SpaceX to take it to 1 million. Anyway, there you go. Have a wonderful evening. Did anybody have any questions? Not me, Tesla and SpaceX, said Stephen Lewandowski. Understandable. It's very high risk. Take care. Enjoy your day, Starlight. Alphabet is bouncing. Yeah, it was a very good call tonight. I'm very happy with it. Let's have a quick look. Yeah, well, you say it's bouncing. It's not. I don't know why you're saying that. It's going down. Anyway, have a wonderful evening, Ninja Cowboy. I have. Thank you. I have it on my desktop icon. Oh, that's wonderful. Thank you, Terry. It's amazing, really, when you think about it. I make a trade, and within minutes, people around the world see it, and they're looking at it, and I take the responsibility very seriously. Anyway, there you go. Emotiam, is that right? I hope I got that pronounced correctly. I'm exhausted. I'm tired. It's very difficult. Doing all day, 12 hours, and investing $1 million, researching, bringing it all to you. I'm whacked. I'm going to go and have a cup of tea, and I'll see you all in the morning. Let's see what happens. Are we going to go to $2 million tomorrow, or are we going to sell for massive losses? I might be forced to if it goes down too much. We shall see. This is how close I am to a margin call. 34.38%. 34%. I'm all in, one stock, SpaceX, 100%, 34% from a margin call. If it drops 34%, and I shall be margin called. It's really simple as that, isn't it? Anyway, it's not rocket science, even if it is rocket science. That's it. Angel says, should I sell my Alphabet? I've no idea. I don't know who you are. Never met you before. You're not one of my members, are you? If you're a member and we discuss things together, we'd understand you. If you came to Discord, we could talk about your position and understand you, but I don't know who you are, so I can't possibly make any judgment what you should do. We like to help people here, not just tell people what to do by clicks and get clicks. And we're not a YouTube channel. We just broadcast on YouTube TV. There's a difference. We're not sponsored by anyone. We do things differently here. SpaceX is made to go up only, Jerry Copeland. Well, I certainly hope so, mate. I certainly hope so, because I've put every single penny I've earned in the last 5 years all on it. I liked it was going down. I love when shorters all pile in, because they always lose eventually. You cannot win over innovation. Profit is profit. People will buy. There's plenty of money to buy, and they will buy it. Remember, this is part of the Nasdaq. Every month, people are buying SpaceX, whether they like it or not. To short SpaceX is foolhardy, and you will lose your money. The question is, how low does it go before people have to sell through margin? And of course, the carry trade is an issue, but that's not going to happen until at least next week. And I mean that. October is the time when I think it's going to happen. But next week, we're going to cover the Japan live rate decision. And that could trigger it. I don't think so. I think we're building into it rather than a surprise. But anyway, I'm new, just arrived, says Angel. Where are you from? Where are you from, Angel? Lovely to have you here. Male or female, where are you from? What country, what state, if you're America? We have 76 countries. I'm Martyn Lucas, voted by Sir Elton John as the world piano man. I've been investing since I was 17 with Barclays Bank. And I built a YouTube channel because my touring days were over because of COVID, and I decided to, touring as a musician, I decided to build a YouTube channel and build the best YouTube TV studio in the world, which I think we have got. There's a grand piano at the back of the room, and all the lights come to life, and there's special effects and everything in here. But yeah, and we're not here to sell videos. We do things very differently. We're here to help people, and I do my job and I share my thoughts, and that's what this channel is about, and that's why we have 98% of the live viewers are members. Welcome. Nice. You got a nice welcome there. I'm new, just arrived, says Angel, and Terry Rose gave you a welcome as well. Oh, there we go.
I can't believe this.
A Tararo's investor has become a member. Thanks for all you do.
You are very welcome, Terry. It's my greatest pleasure. It's the best job in the world. Right, I'm out of here. You got me to stay on a little bit longer, but I am exhausted. So that's it from me. Have a very peaceful evening. I wish everyone the best. Oh, Subwoofer, we're all here with you, Martyn. Take a long break, look at the sky or something. Oh, doesn't that sound wonderful? Doesn't that sound wonderful, Subwoofer? Yeah, I might go and do that now. I'll go outside, look at the sky. You know, why do we do all this anyway? It's crazy. I could have walked away with the money I've got. I don't even need it. I don't even spend it. But I just liked winning. And I want to be in SpaceX when we have a great flight, great launch, and we go right through $1 million. It'd be another win, another little life's achievement if we can do it. But we've gone all in. We've got $1 million. We've used margin, but hopefully we can go to $1 million and pay back the margin and still have $1 million in cash. That would be really something else. Will we do it? Well, tomorrow we'll find out. That's it from me. Have a wonderful evening. Love you all and have a very pleasant evening. Till next time, take care of yourselves and each other. Bye for now.